Hello and welcome back to another episode of Curly's Trading Blueprint. In this video, we're actually just about halfway through this series. I'm thinking we're going to have 15 to 16 episodes in it. So if you're watching this, episode 9, you're over halfway through. So well done. You've done the hard part. We've learned the basics. If you don't know them, again, watch the video again, go over them as I keep saying. Make sure we really know them off by heart. But getting into today's video, we're going to be going over daily bias, how I determine it for the day, and what is daily bias. We'll start with that. What is daily bias? Daily bias is where we think price is going to go for that day. If you're going to trade New York AM session like I do, then you're going to come on about Irish time, UK time, 2 o'clock. If you're over in America, it's like 9 o'clock for New York time. So 9 o'clock New York time, 2 o'clock Irish UK time. That's when you come on. We're going to analyze the chart. We mark out some draws on liquidity to the upside, downside, and then we're going to see where price has been overnight in Asia session and London session. Remember, Asia and London are before New York session. They're the two sessions before New York. So that is how we look at them to see where they've went and where we think New York session is going to go. Daily bias is not, in my opinion, that difficult to figure out. It's basically lower time frame, what we're doing on the lower time frame, but bringing it to the higher time frame. For example, this is where New York session is opening right here for this day. So when I cut this out and I go to the 15-minute, New York session is opening with the next candle open. So we've this candle and then we've this candle. Now, New York session is now officially open. When I look here, we've swept this we swept this high here. We've had a liquidity sweep with this high here. When I go to the hourly, it's going to show that this has swept a high inside a wick. As you can see right there, we obviously have that 15-minute sweep, which is inside this this hourly fair value gap. And when we take out our box tool right here, as you can see, we've actually went over 50% of the fair value gap and rejected. What is going to happen if price off open, when it comes and takes out the high like here? What is going to happen if we start going to the downside? With this candle here, this is the open candle. It completely shoots to the downside. Where is price look like it's going? Well, from the hourly, if I go here, price is pushing down here, as you can see, pushing into an hour fair value gap, and it ends up breaking through it. But that's going to happen later on the session. When you go to the 15-minute, look at this 15-minute candle close. Price is clearly going to the downside to draws on liquidity down here. We be looking to target these lows here, these lows here, these lows here. This is the previous session low. This is the lowest part of the day. Asia low is down here somewhere. Yep, Asia low is right there. So we've loads of draws on liquidity lower when this 15-minute candle ends up going to the downside. And as you can see, for the day, we drop straight to them draws on liquidity because our higher time frame is telling us where we're going. I always use the hourly time frame for bias. I can use the 4-hour and 15-minute. They can also help, but I really do like the hourly. It tends to show you where price is going for that day. This is a bearish example of how we find our draw on liquidity and our daily bias. Some days for your daily bias, it's going to be quite clear and obvious. We can use what we've learned from our trades to actually look and find our daily bias using inversion fair value gaps as well. As you can see in this example here, we end up sweeping this low over here. As you can see, higher time frame sweep on the hourly. Again, hourly inverse up. And if we were actually to take this trade, it's in my opinion a very good trade. You would be looking for the highs here, highs up here, as price has given us a very good setup with this inversion back to the upside, showing us price is wanting to push to the upside and take out maybe some of these highs here, some of these swing highs. There could be an unfilled 4-hour gap here. We'll check. Let's see if we have an unfilled 4-hour gap. I'm guessing we do. We did. There you go. Just from looking, I knew we had, and by the look of it, I knew we had a 4-hour unfilled gap. And that is the clear draw on liquidity for this day if you come on here. Now, that's just an example of when you come on, identify where price has been through Asia and London, and then work your way down to find the draws on liquidity in the direction you think price is going to go. Here is another day and another example. The most important thing, remember, always, is when looking at daily bias, we have to have draws on liquidity on the higher time frame. If you're using the hourly or 15-minute, you have to have hour or 15-minute draws on liquidity. And we need to use the hour and 15-minute to see how we tap it into gaps, SMTs, all these different type of things, as well as seeing what happened the session before. In this example here, we have a trend line to the downside here. As you can see, it's not been swept on this day. We've took out higher time frame draws on liquidity up here. As you can see, we've also tapped into a 15-minute fair value gap here, as well as being an hourly fair value gap. Then price is opening right here. Where does price look like it wants to go in this example right here? We've respected an order block here, as you can see. We have an order block right there. We've respected fair value gap. We have trend line liquidity below. Where does price look like it's going? In my opinion, it looks like it's going to all these lows here. That can be take profit levels, and at least this low here, the bottom of the trend line. And when we let this day play out, when I show the next candle, this is where price opens. As you can see, we tap into the order block, reject back down, holding the wick that tapped in the fair value gap, and I'm going to let price play out for the session. As you can see, you went down and we took out our drawn liquidity for this day, and that would have been us done targeting all these lows here and eventually this low here. And I did actually take a position. When you go to the 1 minute time frame, there was actually a trade right here, an inversion fair value gap that you could have took to the downside to take winning positions on this day. And that is very simply how I find daily bias, using and mixing the 15-minute and the 1 hour time frame. It's basically what you're doing on the lower time frame, except bring it to the higher time frame, find your draw on liquidity, use your inversion fair value gaps we've been using, and just get comfortable with finding draws on liquidity. And when you know where the liquidity is, it's easy to find your bias when you're trading. A quicker one today, I also want to say in our trading, we are not marrying our bias. We will have draws on liquidity to the upside and downside. You then, when price action starts playing out, you can identify where price is going for that day. Some days you're going to have a way stronger draw on liquidity, like this 15-minute. I was only 15-minute trend line. I was only looking for shorts because what I was seeing on the 15-minute and then on the lower time frame, if price start really pushing to the upside, end up taking out draws on liquidity higher, then I can move my bias. But go in, have draws on liquidity to the upside and downside. Some days you're going to have a set bias that you're not going to divert from. Some days you might be able to take long or short positions depending on what's happening and the draws on liquidity that are being swept and left when price is moving on the lower time frame. But that is it for daily bias. We're going to keep it quick and simple for this one. It's just using your higher time frame and your lower time frame together to find where the draw on liquidity is and get an entry to it. And that is very simply how we trade using daily bias. I'll see you on the next video of the Curly Trading Blueprint. Peace out.